Hi, my name is Amy. Thank you very much for watching, and let's make the best decisions that we have with the information that we have at the time. This is for entertainment purposes only, so if you are entertained, please like and subscribe. I would really appreciate that. So, I would like to start this 2025, this new year, with requesting that we look out for ourselves and not get scammed. Okay? So, there is definitely a culture on YouTube and on the internet where people say, like, you have to be a trader in order to get rich quick. You have to be in single stocks in order to get ahead, that the S&P 500 is too slow. And I am here to tell you that you should really stop listening to us financial YouTubers if we are the ones telling you that, because it is not the right way. I was checking my email last night waiting for the ball to drop, which is not something I do a ton. Honestly, I'm bad at checking email, but this person was very concerned because I mentioned that I was signing up for the 100K challenge just so that I could monitor what they're doing, because it's not my style of investing, but it is curious to see whether I could get to 100K this year. But it's definitely not going to be the way that they're doing it. But they sent screenshots, which is amazing, of this is Chris saying at the beginning in 2021, he had $116,000. And then by the end of the year, he had $103,000. And that is not the boat that I want to be in. And I mean, this is 2021. It was a bull market. And this is what happens when you're very aggressive and you make a lot of calls and you lose. And I mean, it's the exact same reason why people are always on yield max about, why is my NAV depleting? Why is my NAV depleting? And so, like, you're getting the premium, but is the premium like outpacing the amount of money that you're spending on these options that get called away because you're doing your strike price too low, like close to the basically what happens with these type of financial influencers is, in the past and even a little bit now, the model of this is we come onto YouTube and we present ourselves as people that are knowledgeable, that you should listen to us, and we're subject matter experts. And if you buy our course, if you take our training, that you absolutely do need, by the way, in order to be a successful trader, then, we'll teach you, and then you can also have the success and riches. Except, like, 80% of people are not profitable traders. So when you take the course and you don't get the money, they'll victim blame you and say, like, well, you just didn't follow the trading correctly, you didn't read that chart correctly, and blah blah blah. And I mean, it's just very sad that the reason why financial influencers are so popular anyway is that everybody gets so anxious about their money. We all want to retire immediately tomorrow and just be able to live our lives, and the stock market really can and does let people live. Like, it's one of the best wealth creators besides, having your own business or whatever. But I also think that in 2021, we did not have high income ETFs, at least not on the volume and variety that we have now. So I think that if you want to get into trading, that the best way to do that is paper trading. Basically, if you want to start investing, go into those broad market index funds like the NASDAQ 100 and or the S&P 500. And while your pot of gold is growing at a reasonable pace, you take a notebook and you just write down the time, you write down the strike price, and the amount of money that you would get from the premium, and then you just do that for a few months of like, were you able to read that chart correct? And that way you're not, your cash isn't on the sideline, but you're also not losing all your money in weird calls. And it just, like, it's really easy to get caught up in the FOMO. And, like, for example, for me with NVIDIA, NVIDIA was really hot when I was coming in July of last year. And I kept trying to research of, like, is this hype or is this for the long run? Because I don't want to just FOMO into this because it is the hottest thing on the market right now. If it's really hot, I don't want to be in it because, I mean, it's going to lose steam, and then, I won't be happy that I'm in it. And all of the YouTubers were like, this is the next big thing for the next 3 years. You need to get in it. You need to get in it. And then I got in it. And then, like, a month later, they're like, well, why did you get in it? Obviously, this was a fad and a trend, and it was going to end at some point. So why would you do that? And I'm like, you know what? It's fine. Mostly for me, I understand Bitcoin. I'm a believer in Bitcoin. So 50% of my portfolio will be going towards, the broad market index funds. And for me, in my view on this, and from my experimentations that I've had so far, and I'm not experienced with trading too much. I'm just kind of experimenting, and from what I've observed and from my own personal experience of less than a year, like, high income ETFs are really good for your fractional options trading, where, like, for example, my account, I have $40,000. And if I wanted to do a SPY call, I wound up doing a leap because that cost me $9,000 to buy it. And then I'm controlling 100 shares, so I'm able to do cover calls on it, which is exactly a poor man's cover call. However, $10,000 is literally a quarter of my portfolio. If it wasn't in the S&P 500, if I had done that and it was that expensive on something like Tesla, and then Tesla went down by a lot, and then when I had to, roll over it, I'm still losing money, and, like, what if Tesla goes bankrupt or whatever? Tesla's probably a bad example, but, like, what if I did it on SMCI, and I was like, you know what, this is the next big thing. And then they had their auditing thing, and now they're threatened to be delisted, and now I just spent $10,000 on this stock. It's a quarter of my portfolio, and I can't get any premiums because everyone's like, oh no, let's stay away from that. So, like, when you get into individual stocks, it is way more risky because if that one stock does something and it doesn't take off, then you're stuck holding the bag. And that's not the 2025 I want you to experience. So I also think, for me anyways, that investing in the high income ETFs when there is a downside, a down market, a downtrend, it's such a different attitude. Like, oh, Misty is $26.60. Like, that is the time to buy. Versus, like, oh no, MSTU is now at $7.66, and my cost basis is like $12. And, now I have to do cover calls to get rid of it, but I don't want to, sell it for less than what I got for it. And it's just like a big thing instead of just like, I have it, I'm getting my income, and everything's okay. So, and most of the people that do watch me are into high income ETFs because I am into high income ETFs, and that's just what I'm into. But, it's not the only way to invest. You can do the 2x and 3x leverage and basically read the charts, get in at a good time, and then wait for your sign in the market that you should pull out. And that's basically like getting a premium or a distribution. But, I think that a lot of people give themselves too much credit on their abilities. Like more than half of people say that they're above average. So it's, it's riskier, but more rewarding. So just be careful in 2025 is what I'm saying. Like, don't just, anytime you want to stray off your core objectives for investing this year, go back to your notes and actually just write down notes right now of like, why am I in this mix? Like, why am I invested in these particular stocks at the beginning of the year? And just don't go after every shiny object, and you'll do so much better and have so much more wealth in the new year. So I am going to continue to monitor what people like Chris Sane are doing and trying to teach us, but I don't believe that, for me, that's not my strategy. My strategy is more, I'm going to do an options wheel on Bitcoin. I'm going to do, when I have paid off my 0% interest credit cards, I will probably just run back into high income ETFs, because this is a lot of management and a lot of stress. And I'll probably have just like 5 to 10% of my portfolio in running my own options just for my own entertainment. But for me, I think that in the long run, letting someone else that has millions of dollars under management and they have their own data models and how to choose strike prices, like that is probably in the long term, the better use of my money if I need income, which I do. So anyways, thank you for watching. I really appreciate it. I just wanted to show you all, like, at least, I mean, this wasn't a full year, so hopefully next year I'll have a full year to show you all. But even with the downturn of this market, I was up like 45% this year. And then VU was up like 24%. So I'm not saying I'm doing something right, but it feels better. Like, I like, in the end, if I beat the S&P 500 as a benchmark, like, that is certainly a good sign. So, yeah, just be careful and don't let your own anxiety about your money get you into riskier investments than you intended to be in. And we will all make it through wealthier into 2026. So I will talk to you all later. Bye.